Good morning, everybody. It is August 3rd, 2020. First trading day of the month here. We had a pretty wild last day of the trading month, which can always get wild, especially at the end of the day, as you saw that incredible move in reversal, really led by Apple. For economic news events, guys, the bigger news events of the week. Today, after the bell, we're going to have ISM manufacturing PMI at 10 a.m. And then the evening, the overnight session, we have Australian trade balance and the cash rate and the RBA rate statement. And really, that's it for news. There's going to be vehicle sales today and construction spending as well. Let's take a look. Because it is the first day of the month, I wanted to go over the daily chart and really all of the indexes that we have. Let's start off from the top. With gold, we'll actually can go over the higher time frame. Still, gold has this, and I have to go even further back in time. There's this massive 50% retracement long that will complete in gold, and it is from the lows of literally 1999 to the high of 2011, and we have, just as of the last week, broken through that high of 2011. And if you look at this monthly close, very, very aggressive. Now, it would be completely normal. Now, our next monthly pullback, because we spent 2 months, it was an inside month in May. It was June was the beginning of the breakout of the inside month, and then obviously you could see the volume really picked up here in July as we cruised higher. At any point in time, possibly later this year, the anchor from the high of April could absolutely come into play. So we would want to be aware of that. And I would think we'd get to the 38 or 50% retracement. And just so you know where those levels are, that 38 would be right at our previous high that we broke out of. So at that point, that is a very important level to pay attention to. The previous high that we broke out of. Now, the futures contract has rolled here, and since the futures contract had rolled, we traded the halfway back from the day before rollover to high. Gold actually had a record delivery of amount of physical gold off the COMEX last month, which is pretty interesting. We moved into the day here, last week on Friday, we broke out of a 50% retracement short, which validated the halfway back long from that Tuesday, and had our next measured move trade. So from the low of Friday to high, we are just sitting inside of that setup here. Sitting inside of that setup. The 50% retracement is a 1978. A 1978.9. to be exact. So just wanted to go over that higher time frame. Our targets are nothing but up here. There is, always intraday pullbacks, but on the higher time frame, the targets are all up for gold. Moving on to silver, I just want to back out here to this monthly chart. Silver had its best month in a decade last month. Pretty interesting, as we had broken out of this multi-year wedge. And what we have run into is the lows of the breakdown going back to 2012. And that is going to be a pretty significant resistance level for some time. Once we can get above that 26, 27.5, we will begin moving our way up towards what I would consider to be the next resistance, which is up at 31.30. But that could take some time for us to clear above those 26s. So silver might be in a higher time frame consolidation, but absolutely still a great trading vehicle. Now, the monthly or higher time frame extension, which was from the highs of the beginning of June, it was the June 1st high to high, has actually already traded here. That was a 22.61, and that traded in this incredible volatile. We literally went from 26.27 to 22.61 the same day. That was one of the biggest daily ranges you'll probably ever see in silver. Let's see what as a percentage change that was from the high to low. It was a 14.5% drop in a single day, and in fact it happened in about 5-6 hours. which is dramatic. The Wednesday following that pullback, we just retested this 38% retracement. So this 38% retracement will continue to be a very important support level over and over and over again, and same with the 2261. So that 38 is right around 2349s. I'm gonna have an alert there, and then we broke out of the full 50% retracement short. We've broken out of it twice, which means we are validating the long setup from lows. Now, today, what I'm going to do is I'm going to look at the full 50% retracement from the low of the range, which is last week's low on Tuesday, to just this most recent high, to the most recent high, which is a Sunday night, and that gives us a support level at 2386, and it's 86.8, so you could round that up to 87, but it, obviously, support isn't always an exact level. It's more of a general area, but that does line up with where the buyers stepped in on Friday. So this 2386 half, 2387 is definitely going to be an important level to watch here today. I'm going to set an alert there as well. But I would expect silver to be back and forth in a consolidation. This is such a huge range. This is probably going to take a couple weeks to work its way through before we begin a move through. This is a pretty significant high in the way it reversed. So I do like to watch when you have that. This opposing 78% retracement, which is a 25.46 as a resistance level until it breaks above that level. All right. Moving on to the VIX, I don't really like to go over on the monthly chart. I mean, because the contract is rolling every month, so it's very hard to have higher time frame targets. But the VIX, you have a couple of different variations. You have a 50% retracement short. So coming out of what was the swing highs in June to low, we had this traditional to target. And then that 50% retracement to low traded to its profit target. And then if you use that same anchor, that 36.65 to low, we are really on the higher time frame bearish below that VIX. And I'm only drawing it because it's a higher time frame. But what we traded on Friday, as the indexes dipped into their 50% retracement longs, the VIX actually held its 50% retracement short. So the S&P totally dipped into its halfway back for the day, but the VIX held its halfway back for the day, once again being more technical than the S&P is, and that gives us a downside target in the VIX at 2580. So we have downside targets in the VIX at 2580 based on the 50% retracement from Friday. For the S&P 500, just on that higher time frame, just being aware of where we pulled back into. We'll go to a 20-year monthly chart. Initially when we were crashing, what I actually wanted to see was this full retracement from the 2009 low to high. Now we never got there. What we were actually holding before the crash was we had previously been holding an extension from the 2007 high, and I haven't gone over this in quite some time because it's typically not very relevant to our day-to-day price action, but there was a 2007 highs to highs extension that completed. Okay, we never traded the 50, we completed it, and we kind of on the lows we came pretty close to the retest of the 50, also the breakout towards the end of 2016. That's really where we stopped. Now, even though we had broken this draw, what's kind of interesting about this extension is our highs completed the first week of the year, and we're through those highs again. Even though this extension is broken on the higher time frame, I do want to just be aware of that being a potential upside target when it does trade, because if you look at, there was clearly some accumulation at these levels. Okay, and we basically were just tagging that 61. This was a Sunday night gap down. The Fed came out. We've been bidding. So if I were to guess or just anticipate bigger targets for the S&P 500, it's a 38.27, and that's a very rough estimate. I don't think we'd ever turn around on a dime, but we can imagine that as the S&P looks as is, it's going to get through this all-time high at some point. We've been very bullish out of lows, and regardless, there has been so much negative news, and the market brushes it off like it does not matter whatsoever. Does not seem to matter. Now, there is also a extension from what I have is the high of 2635, the high that traded on June 15th. And that upside target is more relevant to our current price action. That is a 33.71. And that is most likely, and at that point we will be running into the highs we had broken down from, which I think would be the next major resistance. But we are getting up, this is when COVID kind of became a big deal. This was a Sunday night gap down on February 24th. We are inside of the bar of that candle, and the actual gap is right above us. So I have both where the gap down was and the gap from the previous Friday as it's just my next resistance levels above. What we have held here as of last week was a halfway back long, a traditional. And it was from the swing low of July 9th to high. So it was basically like a halfway back long for the month. We traded out on Friday, July 24th. We traded on the following Sunday night open. We retested those levels Thursday. And we were expecting a continuation to move up in extensions. Now, for whatever reason, we didn't even hold this full halfway back long, which was actually pretty surprising. And going into Friday's open, we had a 50% retracement short that completed targets. We had our next measured move. So we had back-to-back shorts leading us into the low with two completions of a short target. And that's why there was so much action on Friday. Now, we completed that short target right at like 1 o'clock was the low. There was then another valid 50% retracement short, which traded at 32.2775. We came down, we held lows, and we absolutely just screamed into the close. Just rip your face off rally. It was a very orderly sell-off. Profit targets were completing. Halfway backs were completing. We even had a third halfway back that finally broke. And then what I actually posted in the trade room was that this was going to be this, what you're seeing right here was going to be the setup Sunday night. Well, guess what the setup was Sunday night? It was the first extension on the continuation from 32.29 half to high. Now, we traded that 38% retracement initially at 7.30, and then we retested at 3.25, 3.30. We have completed those profit targets. So we are moving into this morning with a completion of a pretty big extension. And I would have, my anticipation based on that sequence is a same anchor new high. Now, a same anchor new high is going to bring us into this zone right here. Okay. Same anchor new high is going to bring us in this zone. 32.64 half, 32.57.75. All right, and that is going to be our next setup here for the S&P 500. Moving on to the Dow. The higher time frame, we're looking at a 4-hour chart. The higher time frame profit targets in the Dow based on the pullback that occurred on June 15th are 29,099. The Dow is, a little weaker here. The Dow held a full halfway back from what was the lows at the end of June. It was a June 28th low to high, and that is what we have stuck. That's what we've come into. And this is the Moderna rally with the vaccine rally on July 14th. That low to high traded, I think that was, what was that, Thursday last week? Thursday, basically retested Friday, and then we began the same pattern to the upside as we did in the ES. Now, we have not completed this target like we have in the S&P, but it is a 26,037 anchor, too high. And we haven't completed that profit target. Once we do, we'll draw the same anchor new high. That upside target is 26,508. 508. The Nasdaq, let's just talk about where its upside targets are. First off, on the monthly chart, the Nasdaq came halfway back from the 2016 low to high. That's what I have just on the higher time frame as far as where that pullback leads. Now, we have this negative 23% profit target above. I mean, for all I know, the Nasdaq could run totally to this negative 61, but at least on a first test, we should spend a couple of days consolidating on that target. And that target could come into play this week, especially considering how aggressive the bid is in the NQ. That profit target is 11,155. Now, coming out of the lows from Thursday's low to Friday's high, we traded a traditional. Now, this is the only market that actually looked inverse of the VIX. We did not hold the halfway back long in the ES. We did not hold the halfway back long in the Dow. They were double bottom situations. So that makes the Nasdaq more aggressive in the way it was bid. Now, what was the sequence out of that low? It was the same thing. It was basically looks like a triple bottom, 1, 2, 3, right? And then we just started ripping. There really wasn't ever a clean halfway back here, but I always like to use that high before breakout to high as an anchor. We perfectly traded its 38% retracement of completed profit targets, and we have once again the same situation here in the Nasdaq as we do in the Dow and as we do in the ES. And that 38% retracement would be our first support level that I would look for an entry into what is the strongest index, 10,915. Half. Oil is just inside of this 50% retracement long, and it is just testing and testing and testing. There's this halfway back short above us, but I really, I don't trust it. If you look at this chart, it's higher highs and higher lows on the daily. So you want to lean at this point to the long side. But we have come off this 38.85 support level, and our upside targets that I have in oil on the daily are 43.35. And that should be, we should all be aware of that this month if we get up there. Trend line here. Possibly could be lining up with this third touch of this trend line. There we are. We had a hammer of a candle. This was a $1.18 range on the low, 10 o'clock on Thursday. We then pulled into a 50% retracement that Thursday. I drew it to the new high. There was buyers at the 50% retracement on Friday. And surprise, surprise, buyers again here. Monday overnight session, 3:30 in the morning, 5 o'clock in the morning. Now, when we broke out of the short on Thursday, there was halfway back that got a free trade. And then when we broke out of the short on Friday, that next halfway back did also catch a bid. So we have broken out of the short once again. We've just failed from this high every single time. We would anticipate a potential entry at the halfway back from the lows of the overnight session high. And right now that's a 40.06. For the USD JPY, these currencies have totally reversed. The dollar was extremely weak, and it was like its weakest month, and I couldn't even tell you how long. We've completed some major downside targets here. There is there's a huge short squeeze going on here in the USD JPY over these last 2 days. We spent, there was a collapse out of this consolidation. We spent 1, 2, 3, 4, 5 days going down and basically have gotten all the way back up in 2. Now, there was extensions last week. We have this traditional. This is the next traditional from the swing high of July. So the high of July to low. And we are right inside this level. Now, what needs to break here, because there's an opposing long sequence. This is not a resistance level. We've already traded the first test unless we can break this extension. And out of the lows on what was Friday, there was this halfway back long in the USD JPY. Totally through its targets, and that swing high to high, this is the first extension, has held here. That upside target is a 106.79, and we're bullish above that extension right now. We need to validate this short. Otherwise, we can just continue to squeeze into this reversal. And the next resistance level that I would have at that point in time, honestly, the only thing I would have is the halfway back from the high of June to low above us. And that's a 107.01. That would be 107.01. Moving on to the Aussie dollar. This is a daily chart. The Aussie dollar had this extension drawn from the daily high of April 30th to high. We completed profit targets on, what day was that? That was on the 22nd of July. We barely went through a high and we're failing again. There is the possibility that the Aussie dollar makes it all the way back into the extension from April 30th high to high, and that 38% retracement would line up with the highs we broke out of, and that's just 69.75. So if there's any ideal level over the next month for the Aussie dollar to come in, it is that level over the next month for us to bounce off any, because we have daily swing high, leg start breakout, leg start breakdown, 38 of a same anchor new high. And right now, it's a trend line. Obviously, that trend line's dynamic, so it'll change. But that is an absolutely massive level, and you can see this is a pretty aggressive failed breakout. We are inside of extension shorts in this Australian dollar from the low of 71.60 to low. We traded it to target with the same anchor new low. It's a little sloppy. Traded to target, same anchor new low. Traded to target just now. We have another same anchor new low. So this is, we had such aggressive continuations in the euro and the Aussie dollar, the pound and the yen, and they're all turning with the dollar getting strong again. And basically that reversal happened Friday, and it's a very aggressive reversal. We had a 72.26. We're down 150 pips plus in a day and a half. This euro has a daily extension from the high of June 10th high to high. Now I was looking at this 38% retracement here in the overnight at 17.22, lined up with an hourly leg start. There was a little bit of a bid there, but we're gone through lows. There's no support I have till a 116.64, and I'm looking at this extension at a 117.67. So either 117.67 or 116.64. They're roughly about 100 pips away from each other as the two levels of interest I'm watching for the euro. The pound, massive completion here. There was this huge front run of a halfway back, goes back to May, that completed targets. But, we ran all the way up in the top side of this range. We might not have any support until that daily extension from the high of April 14th to high, and that 50% retracement is a 129.05 reversal here. Look at that. We have that big hammer candle on Friday. You had a 50% retracement short, complete targets, perfect halfway back short. Your next 50% retracement short is from today's high to low, and right now for me that's a perfect trade setup. lines up with the overnight lows. So it's a 130.66. 30, 130.60. 130.60. Moving on to the CAD, which is having a hard time getting through the lows of June. Come to the bottom of the range, and we are just, I'm just gonna kind of watch this higher time frame short from the swing high of July 14th to low. The halfway back long out of lows is broken. It's 50. It like traded at 61. So I'm looking for this to range between a 133.94 and this 133.41 resistance level. But that's what I have for that market. That is everything I have here for this morning trade plan. Just because it's the first day of the month, try to go over some of the more important levels that could potentially come into play. I will take all the questions in the trade room, guys. We'll go over these things in a little more detail. It's a fresh month. Good way to clear your head, start over, and take it day by day. Everybody prepare to have a great August for trading, and concentrate, follow your rules, follow your system, control your risk, and make this a really good month, guys. I'll catch you guys in the trade room. Take care and enjoy your day. Prepare to have a great August for trading, and concentrate, follow your rules, follow your system, control your risk, and make this a really good month, guys. I'll catch you guys in the trade room. Take care.